All right, can you guys hear me? I just need somebody to confirm that they can hear me, and then I can go ahead and get started. There's only a few of you on, so I'm assuming some people will jump on later, and I'll post this video as well for anybody who missed it. That way you guys can play it back. I just need somebody to confirm that they have volume, and then we can get started. All right, just checking the mic here. Are you guys able to hear me? Volume, anybody can hear me? All right, perfect. So you guys can hear me. So I'm going to go ahead and get started. So what we're going to cover today is a little bit of what happened in the market. I have about 13 to 14 chart requests from everybody. I'm going to talk about all the different charts. They're all in different sectors, so it's going to be pretty cool to go through all the sectors and see how they all perform during the market downturn that we had, the unexpected market downturn that we had early morning that was kind of frightening to a little bit of traders out there. And other than that, I'm going to go ahead and talk about the S&P 500 a little bit. I'm going to go over some of the key supports that we're going to be looking after, and that's going to be towards the end of the video. So before I get started, let me go ahead and talk about what system I'm using, just because I like to introduce it to everybody. This is called tradingview.com. It's a completely free system. I'm not sponsored by them or anything like that. I'm just a really big fan of their charts. But other than that, let's go ahead and get started. The first chart that we're going to start with is called CSLT, and that's by Andrew. So if you're not familiar with what we're doing here, or if you're not part of the chat, what we do on a weekly basis or on a daily basis is I take chart requests, and I usually send these chart requests out via messages in the app. But today I felt like going live on YouTube. That way I can go over some of the setups and show you exactly what I look for when I am opening up my charts and when I am doing any type of analysis myself before I send it out. So the first chart we're going to start with is going to be CSLT. So with CSLT, what we're going to be looking for initially, and this is what I do with almost every chart, you'll see is I open up the daily candles to start the session with, because the daily candles will obviously give you the more macro level side of the picture. So what we want to look for in the stock market, and that's depending on if you're trading short term or long term, is looking at the bigger picture and the smaller picture and see how they fit into one another. So obviously, if you look at the daily candles, each candle is going to show you a full day of movement. So for example, with CSLT, this one candle shows me that the stock had opened up, and during the high of the day, the stock had gone up all the way to $1.40, which is the top of this wick, and then it closed down here at $1.34. So it got rejected at $1.40 at the height of day. So with that being said, we know that we can put a resistance point at $1.40. So that's going to be your main resistance of focus tomorrow if the stock was to continue to go up. So it's proper to draw a resistance lines at $1.40. So that's going to be the resistance of focus. Now your support of focus is going to be the place where the stock kept bouncing up. So you can see that there are two different supports that you have here. Your first support, which is your primary support, is going to be at $1. So the reason why it's at $1 is because this is where the stock had broken out from initially, and this is where it bounced back and bounced off of the support. So every stock that breaks out has a tendency to come back down and test the support as test that price point as a support, and if it successfully bounces, that means the stock did have an indeed successful breakout, and it continued its upward momentum, and it stayed in the new trading range. Now with that being said, we also have another support that the stock came down and bounced off of multiple times, which is at $1.20. So your primary trading range that the healthiest is going, that's the stock is going to stay in, is going to be between $1.20 and $1.40. Considering the stock had shot itself into new territory today, you need to consider that the stock is going to need some time to consolidate before it has a full-blown good breakout. And another thing to keep an eye on is going to be volume. So the volume for the stock today was 2 million compared to yesterday was at was at 300,000 traders yesterday. So one day of strong volume is not enough for confirmation that the stock is going to continue a trend up. You want to see multiple days of consolidation and multiple days of strong volume. Now, in terms of the micro picture, which is going to be the short-term candles, we can see that the stock had indeed created another trading range. So notice how we didn't see this trading range within the daily candles, but when we zoom in a little bit on the short-term candles, we can see that on the short term, which if it's a shorter term support, it's going to be a less significant support. So if it's a short-term support, you have a support at $1.30. So, and the stock is consolidating right above the $1.30. So your tighter range for the stock is going to be between $1.30 and $1.40. And to predict where the stock can go next, so if it does indeed break out of $1.40, the stock is going to go to the next price target, and the next price target is going to be the very next significant support that the stock has, which happens to be at $1.60. So if the stock breaks out of $1.40, is going to move to $1.60 because that's the next resistance that the stock has. So pretty much what I'm seeing from the stock is a bullish move, but I don't like how weak the bullish move is. I would like to see a couple more days of consolidation or perhaps a little bit of more volume flow in before it tests for that $1.40 breakout and heads to $1.60. The next stock is going to be Izea, which was a pretty popular stock on the market today. So let's see what the daily candles did for the stock. So it looks like I'm seeing one strong day of bullish volume. Notice the first thing that I always look at is how much volume is the stock getting. So one day of 22 million and the previous day was at 1.7 million. So that's definitely a surge for the stock, and it looks like it has been coming down for a while. It created this wedge down pattern and it finally wedged itself into a breakout. As soon as traders saw this candle right over here, this represented a sign of a reversal. So it's not enough to just have one candle tell you that it's a sign of reversal. You need to follow it up with a candle that confirms that candle. Let me explain. So if the stock here made this candle, a lot of traders who are a little bit more amateur or a little bit more in a rush will jump into the stock thinking that this is a reversal candle, but they didn't wait till the next day. But notice how on this candle, the stock on the next day made a bullish engulfing and then took it up on the very next 2 days. So that's the difference between waiting for confirmation and jumping into the stock when it's a little bit too early. You always want to wait for a confirmation candle of the possible reversal, which happened to be a bullish engulfing in this case, and the stock pushed back up and now it's trading at $1.26 as of close today. When the stock pushed to its highest point today, this is why we focus on the micro picture and the macro picture, because if you were trading it intraday, if you had looked between the two time frames, you'll see that the stock got rejected not at the $1.40 resistance, it got rejected at the 20-day moving average. These two lines represent the 10 and the 20-day moving average. That blue line is the 20-day moving average. At the highest point of the day, which is the top part of this wick, the stock got rejected at $1.40 and got pushed back down to close just below the 10-day moving average. So tomorrow, your primary focus is going to be the 10-day moving average, and then eventually you want the stock to test the 20-day moving average. But don't give up on the setup so easily. Sometimes these stocks will take a few more days of consolidation, especially after a big move, for them to actually make that move. So definitely set your alerts at perhaps at $1.30 and $1.40. $1.40 is going to be the primary place you want the stock to break out. Now, if the stock breaks out, what you want to focus on next is going to be the very next resistance that it can go to. So if the stock breaks out of $1.40, where can the move take it? Unfortunately, the move will not go far. The stock has another resistance at $1.50 that it may get rejected at. If it doesn't have similar or more volume than it did today, then the stock may not actually make it to that resistance. Now, the primary support you have for the stock is going to be at $1.20. So you want the stock to stay over that $1.20 support for it to remain at its healthiest, because notice how that puts it back in higher high territory. As long as it's down here, it's still making lower lows. But as soon as the stock crossed over that threshold of $1.20, the stock is now making higher highs, and we want it to stay over that $1.20. This is the range between $1.20 and $1.40, eventually to test for a breakout. The next stock I have is going to be BB, which is BlackBerry. Let's see what this stock did today. The stock had a very it had a pretty strong open. It opened just above the previous day, but it closed below it. So the stock opened at a high of $5.12 and it closed at a $5.03 point. Now, from an outside perspective, you may think this is bad news for the stock, but this is just actually an inside day candle, what we call it, because the stock managed to stay at half or above during close for the market. That whole day, after having a strong day like this could be a sign that the stock will keep going up. These were just some traders taking some profits, but notice how the stock stayed at half the above the half of the previous day candle, and the volume was a lot less on the selling out. So volume here was 7.7 million, volume here was 3.5 million, meaning that not all the traders who bought it up are taking profit, which is a good sign for the stock. So primarily tomorrow we want the stock to maintain above the $5.03 mark. This is gonna be the close of today. You want the stock to kind of hang around right up here for it to remain at its healthiest, or else the stock is in it will be in a risky position if it drops below that low of the day today. But overall, I'm seeing a nice pattern develop on BlackBerry. You can see that it's a pretty round bottom. The stock is fluidly moving itself up, but it's got to get through that $5.20 resistance for it to really make any significant moves up. So place your resistance at a $5.20 mark and expect the stock to consolidate just below it. As long as it's above, I'd like it to stay above $5, but the stock actually technically has until $4.80 and even $4.60 depending on how much of a high risk trader you are. As long as it's within these price points, the stock remains in its healthy range, but it will be at its healthiest above $5. So the stock is likely to consolidate here before testing 520 again. When the stock breaks out, the very next resistance is price target is going to be the very next resistance, which will be at a $5.40 mark. So those were all for Andrew. The next chart I have is going to be for C, and that's going to be for Citigroup. Jillian requested this. Let me go ahead and remove all these lines that I've already drawn out. So right off the bat, what I'm seeing on the daily candles and when I look back through the market, so if you're watching the market all day, or if you have a little bit of an idea and if you studied your charts from the day, you'll notice that some sectors will move more than others. Today, the banking sector and the financial sector in general was doing pretty good, and they all went up. That is a good sign for them as because they had recently made a move up, such as Citigroup. Let me go ahead and show you. So the stock made a pretty strong move up. Right over here, the stock made that reversal candle and then confirmed it with a strong buying candle. Then the next candle showed signs of strength. Notice how the next candle remained its position above this daily candle. Stock took some time to consolidate, but notice through the consolidation period, it never fell far back below that daily candle that it initially gapped up at. And then today it showed us another sign of strength. So this is what happens with a lot of traders, is they don't have enough time for they don't have enough patience for their positions, when really their positions can be gold and they just need to give them a little bit of time. So here the stock has a support at $50. The stock managed to maintain above that support through that entire consolidation period. So your primary concern for this stock, or your primary focus, is going to be that $50.50 support. You don't want the stock to dip far back below it. The stock is likely here going to, because this was a bullish engulfing. So notice how on this daily candle we had a bullish engulfing on it, which is a great example, which means that the stock is likely to see a bullish move in the near future. So I like what it's doing here. The stock will likely consolidate here, or even gap up between the 52 and 53 price point to eventually finish off this round bottom that it's making. You can see that the stock had tried to make a breakout prior to this. You can see right here, the stock tried to make that breakout, but notice that the breakout was too vertical. You don't want the stock to break out going straight up vertically. You want the stock to make a nice fluid round bottom like we saw with the previous chart on BlackBerry. If you compare this breakout to BlackBerry's breakout, you'll see that the stock is making a more curved bottom rather than going up vertically. Anytime a stock goes up vertically for a breakout, most of the time it fails unless it's news induced. But other than that, that's going to be the difference between Citi and BlackBerry. Let's go back to Citi. That way we can give you a price target for the stock to continue to go up. So considering the stock got rejected right at the $55 price point, you want to make that your price target. So your initial price target to take profits at is going to be 55. After that price target's achieved, the stock will likely get rejected at 55, come back down, and retest the breakout point at 52.50 for support before bouncing up and continuing that way up. So you always want the stock to move into the next trading range, take some profits, allow it to consolidate, and then perhaps add more to your position as the stock breaks out again, or continue to hold the same one with a safe stop loss. Price target's going to be 55 initially, and then it's going to be 60 for the second price target. Next chart I have is going to be Walmart, and that's for George. Let's see what the stock did on its daily candle. So we actually have been talking about this stock in the group for a little bit of time. I feel like I sent out a chart for somebody not too long ago. The stock had made a pretty big move over into the 127.50, 134 price range, and then it remained consolidating. Notice how I just mentioned to you on the previous chart how the stock always gets rejected at the previous resistance, which it has been here before and got rejected. So this is why we take it, because we want to capture profits before the stock gets rejected, and sometimes the stock even falls a little bit short. So it's always good to get in the habit of taking profits when you get near a resistance. People took profits right over here. That resulted in the stock coming back down. It tested the support to bounce up, and it did so successfully and maintained position between 127 and 134. Now the stock had some pretty massive news for Walmart today. They got that the news that they were also interested in purchasing TikTok with Microsoft, which I would not know for the life of me how they're involved. But they are going to, they did announce that they're in the talks for it, and the stock had a massive influx of volume that took it near all-time high territories, but then the stock couldn't keep that momentum and came back down. So now what we look for Walmart is for it to stay above in that trading range. Notice how the stock gapped up over that resistance that we had initially set for it, and notice how on that gap up, when it came back down and tested support, it bounced right at 136, which happened to be a previous resistance that it broke out of. So when the stock broke above 136 today, it broke out of the resistance that it made here, and automatically that resistance turned into a support, and the stock came back down, dipped just below it, and used it as a trampoline to come back up and close above it for the day. So now tomorrow, your primary support to look for is going to be 136. The stock, I would like to see the stock consolidate above the 136 to eventually gain some momentum and then go out to test for all-time highs once again. The next chart we're going to talk about is going to be ENPH, and that's for Joey. Let's see what the stock did today. So as far as the daily candles, the stock is definitely looking to make a move sometime soon. You can see that there's some kind of squeeze coming right at the top, but it's definitely taking its time. You don't want the stock to break out here because it won't keep that momentum. It's a little too vertical. The stock technically has a trading range in between $70 and $77.50, which is a little bit more than my liking. So if you have a lower risk tolerance, you can put $72.50 as your support, because that's another weak support that the stock has had. I'd like to see the stock consolidate between $72.50 and $77.50 until it gathers enough momentum to eventually break out. Now the stock did have a pretty strong selling day today, but that doesn't mean it broke the pattern. Notice how the stock maintains that pattern. It still looks clean. It still looks like it's squeezing that ascending triangle pattern for an eventual breakout, but it will take some time. If you're looking for entry on the stock, you can enter here, use $72.50 as support to place a stop loss just below, or you can even place 70 as the stop loss. So as long as the stock maintains this ascending triangle like pattern up here, eventually I do expect it to break out of $77.50 and reach all-time highs, perhaps to the $80 to the $82 price target. So the next chart we have is going to be Intel, which has been a pretty popular one. This is for Daniel. So the stock had a daily candle that is kind of we call this a dark cloud cover, which a lot of tech stocks did suffer a little bit today. Intel being one of them is not a surprise at all, because the stock is in a pretty sensitive position after that massive drop that they made on their earnings when they said that they are lagging behind on in the chip industry. So that massive drop will take some time to recover. Stocks take the elevator down and the stairs back up, and as you can see, that it's definitely taking the stairs back up. Now overall, Intel is a good company. They are likely to get back on their track. So if you're looking for a long-term play, this might be it. This might be a good one to get into. Now, I've mentioned multiple times that the stock is still not at the safest point of entry as long as it's trading below 50. So notice how the stock, every time it tried to break out of 50, it got rejected and came back down. The longer it takes to consolidate and the more upwards the stock moves, the more tightly it's going to squeeze. And the tighter that squeeze, the stronger the breakout. On the first breakout, I expect the stock to move to around 52 before it gets rejected. When it gets rejected, it will likely come back down and test 50 as support. So remember how we talked about breakouts always testing the initial breakout point? The stock will likely go to 52, come back down to test 50 as support before bouncing up and eventually gaining enough momentum to break out of 52. And our first price target is going to be 56. Now, a lot of people will question, well, if this is the full gap, why are we placing our first target at 56? One, it's common sense. The stock is not going to jump by $12 to $15 just like that. Two, $21 just like that. Two, the stock has a previous resistance at 56. If you notice, the stock had used 56 as a support through this entire period through May. And when the stock finally broke below that support, the stock automatically turns that support into a resistance. Therefore, it becomes our first price target after 52. Now, the next chart we're going to talk about is going to be Snap, and that's going to be for Richard. By the way, I haven't taken a look at any of these charts. These are all new. These are old lines, so don't really go off of them at all. This is freshly looking in these charts. So Snap, pretty impressive 3 days. I'm liking what I'm seeing here. You can see that there's bullish action going on through the day, all 3 days, and volume keeps going up. Now the stock made a very significant move today, and it closed above the 10 and the 20-day moving averages perfectly. Now when the stock closes above them and the moving averages look like they're about to cross up, that means that we may get a bullish reversal, which on Snapchat I don't doubt at all. Notice how Snapchat had made a pretty impressive breakout. When it broke out of 21, the stock ran all the way to 27 but couldn't keep that momentum. You see this reversal candle right over here, and the stock came back down, made another gap down. And when that happened, notice how the moving averages crossed back down. So that means we're going back into a bearish sell. And when the stock sold off, notice how it bounced right off of the initial breakout point. So the stock has two breakout points that I can spot right away. It has a breakout point at 19 and another breakout point at 21. And when the stock came back down, it tested the 21, dipped just below it, and bounced back up, which means that 21 is being used as a support. Therefore, you can safely put a stop loss just below that point, and you can enter a high risk play right over here, right where the stock is trading at currently, and use that place as a stop loss point. Now, I'd like to see these moving averages cross back up, and I'd like to see the stock's daily candles maintain a level above those moving averages, and for it to start using them as a support to carry it back up to eventually go up to 26 or 27. Then it will likely come back down and then probably make some kind of bullish pattern right at the top between 25 and 27 before continuing that breakout to the top side. Next chart is going to be BYND, which has been pretty famous in the group as well. Good for them for making that big move today. Same thing with BYND. Notice how the stock came back down to its initial breakout point and bounced off of it 3 times. The stock stayed near that support point for quite a while, which we call that a loading zone, that many traders were jumping into the stock and starting to gear up momentum for it, and it finally did make that breakout today as the stock pushed over the 10 and the 20-day moving averages perfectly. But notice how the stock made it to 140 before getting rejected. Therefore, now your new trading range is going to be between 130 and 140. The stock is likely to consolidate between them before attempting a breakout to the 150 price target. Now, in terms of BYND, when we look at the overall picture, I always like to look back in history for the stock. We can see that the stock is really making a very important move that should not be ignored. If you are a position trader or looking to get into a long-term trade on this stock, 120 is going to be your sweet spot. That's going to be the primary support for you to focus on. 140 is going to be the very next resistance to focus on. The stock can make a very big move if the stock manages to break out of 160 and eventually move up to the $200 mark and 240. BYND has a pretty low float, so the stock has a low float, which means there's not a lot of stocks out there for people to buy that are available to the public market. And BYND's products are really everywhere if you really consider it. My humble opinion tells me that a lot of people haven't caught up to how big BYND can just grow to be, and they are very international. Now, my group knows exactly that I love this stock, and I'm a firm believer in their long-term game. So I do definitely see some crazy movements coming from BYND, and it's a fairly new stock, so it has not found its sweet trading price level just yet. So it may actually end up shooting above to 160 and then eventually coming back down, testing 140 before testing 160 again for a big breakout to 200, then 240, and then further on. Now, that is a very optimistic and I will say I am speaking a little bit on my bias, but I do love the stock. I believe that they are up for something big from a company standpoint and from a technical analysis standpoint. Next stock is going to be Yeti, and that's for Sam. Sam, welcome to our group. You're a new member. Thank you so much for joining us. We appreciate you being here. So daily candle on Yeti. So Yeti looks like came back down to bounced above the 20-day moving average. So the stock closed below the 10-day moving average, but it bounced off of the 20-day moving average. Now, from the naked eye, it is a worrying factor, but to a more a mature trader or perhaps experienced trader, you'll know that the stock is actually still in healthy condition. The stock will remain in healthy standpoint as long as it maintains that $48 price point as support. You can see that the stock broke out of that $48 price point at one point, but it hit a double top right around 53 and came back down, and now it may come back down to 48. As long as the stock stays consolidating between 48 and 54, the stock will remain in good health. I would like to see the stock maintain at least 50 for the safest health, but 48 is a completely fine support to use as well. You have to be firm on your stop loss. If the stock dips below 48, it's something to get out of and perhaps wait for another setup to be developed. But overall, Yeti is still doing well, still in healthy standpoint. If you need a better stop loss, I can always provide you one when you ask. Lewis, you asked for RUTH. RUTH Hospitality Group, also been a popular one for you guys. As you can see, we charted the stock yesterday. We placed this resistance at 9.80 and the stock successfully broke out of it today. The stock even made it to $10.15, which is below our $10.50 price target. But notice how the stock closed above that 9.80 resistance, which automatically turns that point into a support. So we automatically switched the 9.80 resistance into a support, and now we can zoom into the smaller picture to see what the stock's been up to. So the stock broke out. Notice how every time it came back down, it managed to bounce up and close above 9.81. Now the stock is creating some kind of bullish action right over here. As the stock moves up, you should always move your stop loss up. So your stop loss should be just below 9.80 or maybe 9.70, because that's where the gap up happened. And you can expect the stock to now eventually test the new resistance it made. The new resistance it made is where the stock got rejected before it came back down, which is going to be right around $10.05. So you can see the stock consolidating between these 2 points to eventually break out to hit that 10.50 price target. One thing to note about the stock, though, is it is moving in a little bit of a vertical fashion. So a pullback on it may be a little bit stronger than you anticipate. So always be on the lookout for that. If you need a lower stop loss, you can just go ahead and ask. I can provide you with one. Manny, the next chart is going to be AMD. Now AMD, yesterday we charted this out and we talked about the importance of this price range between 85 and 87.50. The stock broke below that price range today. A lot of people may have been worried, a lot of traders may have been worried, but this is why we create different trading ranges for the stock. Now the stock broke out from the healthiest trading range, but it didn't